Netherlands. They all together account for 12.3%. This group economy, the pigs are in trouble. UK, France, and Netherlands, though not in that trouble, but will go on growing very slowly. It means for those one who selling to the European market, they will find that quite a substantial part, or even half of their market are only growing, or even if it is recovering, are very slowly and slowly. So what happened? In different countries, the saving rate are different. For those economies growing fast, indeed, because they have a rather healthy structure in their economy. For say, they have all traditionally, all along have a higher saving ratio. Germany, Sweden, they have saving ratio higher than average of the EU, while the others, some of them really have a very low saving ratio, and because of the economic downturn, because of the debt crisis, for those one who already somehow overspending, they have difficulty to maintain their living standard or spending. So, in general, what we look at the European market in general, what we find in the sentiment of the consumers, they are less cautious than 2 years ago in the year of 2009, because large, quite substantial economy are already stabilized, but they are still very conservative on spending. They will select what they really would like to buy rather than just go out to the window and window shopping, buy whatever they see it is attractive. Now they become more sensible and become choosing more selectively. They more interested to look at what are offered in the market at discounted price, what have more practical value to them, not just the sentimental attachment or sentimental values. And they still, although they're looking for what we say lower or discount price, but the European consumer are still very much insist on quality. And also they will like to welcome more discount or other incentive for them. And in the past, the European consumer are more interested for what we say the international brand, the European brand company will be aware. But now they are more ready to accept house brand or private label. That is the change or the consumer behavior. Now, if we look at the value or the brand values, you look at those Germany, France, Spain, and UK. Really all very much are those brand offering a lower price, mass market consumer goods. They amount to greater values. And increasingly, more the European consumer will look for price comparisons in the internet. So they are more ready to search for internet and even purchase in internet. For what we say, the more popular one will those products as ICT equipment, followed by entertainment and leisure goods. As I said, nowadays, the European consumer are not just crazy for big brand names. They are more ready to accept private label. And here is that particularly for more mature markets like Germany, and also other economy, Belgium, they already to accept private label. And overall speaking, that now in those troubled EU economy, we are seeing a higher default risk, and then the higher cost of refinancing, and also because of the difficulty in their domestic economy, it is rather difficult for the exporter to bargain with the buyers to raise price. When we talk about the cost of production increased by 10% or even higher in China, it is rather difficult for you can pass on more than 5% of the cost escalation to your buyers. That is some sort we have to adjust our production or absorb the lower margin or find other alternative way to cope with the difficulties. And it is all not that gloomy. While the Europe market is really in difficult time, increasingly, as we put it in the first question, the economy are rebalancing. More and more European companies are interested in Asia market. And then we have seen more and more European companies come to Hong Kong with their regional headquarters, open up and operate in Hong Kong with focus on Asia market. Of course, China is one of their very important target market. And according to the information of Hong Kong, Invest Hong Kong, we found that there are still more than 500 projects looking for European companies interested to have a permanent presence in Hong Kong. And we all know now Hong Kong ranked #1 as the top city for luxury and fashions and attracting more than 270 top luxury brands, as we see all here. And some of the luxury brands are really going to be listed in the stock market. The purpose is not just raising finance, but also increasing their profile and have a bigger and better exposure to Asian consumer. That is, not things are all negative. Sometimes you still find something interesting and positive. Thank you.